Welcome, everybody. Today's discussion is hosted by the Financial Inclusion Forum. And as many of you know, the Financial Inclusion Forum is an organization based in London. And since 2005, we host conversation around financial inclusion topics. As a part of the Financial Inclusion Week, today we're going to explore some critical and growing challenges in the fintech space and across many jurisdictions, which is fraud targeting payment accounts. With the increase of digital wallets, fintechs, and instant payments, also fraudsters have found new ways to exploit these technologies. And these affect consumers and businesses globally. This is a financial inclusion challenge because with the ease of accessing money and transfer them immediately, there is a challenge on the financial inclusion side if we don't look in the issues and overcome it. I am Antonella Abategiovanni, the Executive Director of the Financial Inclusion Forum and your moderator today. I'm very delighted to lead this conversation around a subject that is becoming increasingly important in developed and developing economies. And I am surrounded by experts today. So I'm very pleased to introduce you my speakers of today. I would like you to introduce yourself, actually, and I'd like to start with you, Meena. Would you kindly give us a brief introduction of what you work for and what you do?
Hi, everyone. I am Meena, and I'm Chief Product Officer at Zindgi. Zindgi is a fintech or a digital banking arm of JS Bank, which is a prominent commercial bank in Pakistan. Zindgi was launched in 2022 with an aim to provide specialized financial services to Gen Zs and millennials, which means that not just the payment use cases, but the investment, savings, and credit use cases to start with.
Thank you, Meena. Fred, can I pass the word over to you?
Of course. Hi, I'm Fred Fenwick. I'm the founder of Eshango. Eshango is a financial service platform being built out in West Africa, particularly our current focus is on Liberia. We are aiming to target the informal sector and try and support them to make better financial decisions and offer them better financial services than are currently available in a very non-digital environment. So yeah, I've been running it for 4 years now. It's been a few pivots, but I think we're getting close to product market fit, which is great.
Thank you, Fred. Caetano?
Great. I'm Caetano. I'm the founder and CEO of Barte, which is a Brazil-based payments company. And basically, we're a payments platform making it smoother for you to accept payments, send payments, finance transactions that might be paid in installments. And so we're optimizing cash flow for mid to large companies in the Brazilian market right now.
Thank you, Caetano. Rory?
Hello, I'm Rory Copeland. I'm a financial services regulatory lawyer at A&O Sherman, which is a global law firm. And I also happen to be a director of the UK Financial Inclusion Forum. And my work, which is mainly for payment service providers and payment systems, has involved advising on the drafting and then implementation of a number of anti-fraud and anti-push payment fraud regimes globally.
Thank you very much for being with me this morning. In the last 10 years, the use of technology in the retail financial services has been really transformative for billions of users. We have now easy, cheaper access to financial services across the world and different ways to store money. However, as the ease and the access increase, also account holders have been more exposed to frauds and scams through different techniques as impersonation or the misleading of goods and services. One of the data that really struck my attention during doing some research for this webinar was in 2020, 18 million of Americans have been defrauded through scams that have been involving digital wallets or peer-to-peer payments. And recently, the CEO of the Nasdaq said that the US economy growth could be higher of 0.5% if it weren't for frauds. And that came me wondering if an advanced economic system like the US with so sophisticated anti-fraud technology in place can be suffering or can be impacted by scam and fraud. What is the impact that this kind of mechanism have on other economies? Fintech has provided us such great benefit like speed, accessibility, connectivity, but on the same time, they open the door for mischievous behavior from people that are manipulating other individuals and businesses. And this is what we are going to explore today, how this manipulation impact individual businesses, how economies have been impacted globally, and what fintechs and regulators can do to stay ahead. And to do so, I'd like you, Rory, to help me out in understanding what are the differences in the payment fraud types and the different economies.
Sure, it's a great question because fraud and fraudsters are not the same everywhere, and they're in fact very creative and adapt to their context. And so the types of fraud that we see around the world often reflect both the payment methods available, so the channels, and also things like the level of consumer awareness and other kind of demographic factors. And incidentally, a couple of days ago, a think tank in the UK called the Social Market Foundation published a big report on payment fraud, which has some quite sort of interesting details. So I think it's probably unsurprising that the UK, as a percentage of overall fraud, has a highest prevalence of card detail theft, so people stealing other people's credit cards and using those to buy things. And that's understandable given the high degree of card usage in the UK. Singapore, for instance, has the highest prevalence and also reports the largest losses per victim from authorized push payment fraud, which broadly speaking is where the fraudster tricks somebody into intentionally sending them money. And that often involves the use of online banking or other sort of account-to-account payment methods. And as I'm sure Fred will touch on, there are various African jurisdictions like Nigeria and jurisdictions in West Africa which see higher levels of fraudulent targeting of mobile money accounts, where SIM switching is a more prevalent problem. And then if you think about kind of consumer awareness and the impact that has, jurisdictions like Portugal and New Zealand and Singapore see authorized push payment as a larger percentage of fraud, possibly because this relies on sort of technology, relatively wealthy targets who can be tricked by fraudsters impersonating their family members, and then easily accessible instant mobile banking transfers to execute on the fraud quickly. In contrast, we don't in those jurisdictions, you don't see the same kinds of Ponzi schemes and investment frauds, which have been devastating in places like Nigeria and Uganda, where the level of consumer awareness about financial products and the availability of sort of verifiable information is perhaps lower. So it's very context specific.
Yeah, and on the context specificity, I'd like to get to you, Meena, and understand a little bit what is the priority for Pakistan in terms of payment fraud. What are the regulator, the banks, and fintech like Zindgi doing to address these issues?
I'll begin with a bit of context about the Pakistani fintech space. So we've done and we've seen actually extensive or a significant growth in the adoption of digital banking and digital financial services in the country. The industry itself is a little more than a decade old, but last 5 years, the numbers have been, or the growth has been quite noticeable in digital financial transactions. So, in the context of that, obviously, fraud is one challenge that, is also growing with it. And also keeping in mind the fact that in Pakistan, we are still, geared towards driving financial inclusion, and we haven't reached the required numbers as yet. So in this context, I think the regulator itself has been, at the forefront of, coming up with the rights regulatory regimes and the guidelines and measures to enhance security, and other than that, also to basically educate consumers and make the banks accountable to manage this, at fraud prevention. And I think one of the most common frauds in the country are social engineering. Because people are easily manipulable. People, the fraudster obviously will convince them to give their sensitive information, their KYC information, even OTP and and KYC data to them very easily. And other than that, I think the country is still, dealing with, educating the users on, the levels of fraud and how your information is not to be passed on to the fraudsters and scammers. There are other smaller level, I would say, frauds that also exist, which is like masking of, the SMS or the codes. Which is now restricted in the country, and again, spoofing of some helpline numbers as well to get information. There are some SIM swap fraud that exist as well, but primarily, social engineering is something that we're dealing with, the first level, because a lot of these fraudsters obviously use impersonations and multiple other techniques to trick the customers and individuals. So at Zindgi, we have 5 million plus users. So we try to build security and these fraud and risk controls within the app, which means we have rules develop at the back end to make the app more secure. And again, we have biometric verification technology also built in the app, which is the fingerprints and the the facial recognition. We try to keep a fine balance between our user interface and which means that educating customers during the journey, ensuring that the journey itself has built-in questions, say security questions, multi-factor authentication to make it more safe and secure, and obviously make it less fraud prone. Another thing that we're doing at our end is that we're educating and convincing customers to basically invest in low risk mutual funds and also in stocks to basically diversify their income and make it a little more safer. Again, we're spending a lot of time in educating our customers that on a very basic level that yes, we were not going to contact you, we're not going to ask for your personal information, we're not going to ask you to send us any money or transfer any money. And again, on the financial literacy side, we have this program called Financial Fridays. So every Friday, we come up with a different set of education material for customers to help them deal with converting to the next level of financial services, which is again investment savings use cases, and then deal with these basic financial services questions that they have with respect to obviously keeping their information also secure. Other than that, I think our credit algo is also designed in a way that we look at user behavior and transaction pattern, so that we could identify any anomalies in it and obviously manage it right there and then.
Thank you, Meena. It's very, very, very inspiring. I really like the idea of having financial Fridays as well. I would like to move to you, Caetano, on the businesses side. I know that Barte purpose is actually to help meet large enterprises in optimizing their cash flow, and I'm very keen to understand, how do you navigate payments, frauds, scams, and all the things related?
Great. And thank you, Antonella. Actually, payments is complex. Meena was talking about social engineering. There's all of that. There's social engineering. There's credit card data that got leaked. There's loads of ways in which fraudsters try and work their way onto processing a payment and then advancing that payment through your platform, and then actually vanishing off the face of the earth. And so this is the sort of behavior you need to map out mostly through data and behavioral data. So obviously, all of the first steps on KYC once you onboard the customer are very important. Who is this company? Who owns it? Who's actually registering for it? On mid to large companies, you actually have a closer relationships, and so there's a lot of automation through it, but you can actually validate this in a more tailor-made way, and so you can be very careful on who you onboard into your platform. But at the same time, one thing that's very common in the Brazilian context is it is super common, especially between companies transacting through credit cards, to have higher average tickets and to pay this in installments. So what actually came through a wave of buy now, pay later to Europe and the US in the last couple of years has existed in a different format through credit cards that are then guaranteed by issuer banks, which enable customers to actually pay something in installments. But merchants, when they sell something in installments, they can actually advance, or usually advance, those receivables that would be spread out over 3, 6, 9 months, whatever it is, and they can bring it to the present day. Now, the big risk is that you actually finance one of these transactions, and then the payment has a chargeback because the rightful owner of the card wasn't the person purchasing. And so this is the sort of fraud we mostly encounter with processing online payments. Now, all of that goes to behavioral data. So what we do is our fraud engine is very anchored on how a transaction happens. And so we pick data from everything. Where's the purchase being made from? How fast are they doing this? How fast is the information being filled? Is the data coherent? Is the same data doing multiple transactions at the same time? And we try and understand what patterns there are where someone might be using this in a wrongful way. And so through that, and this is a cat and mouse game, so you'll see more creativity and then you'll understand better patterns, and the more data you have, the better. And so through models that can read data and can actually reason quite well through that, you can scale this and you can automate it, because this all happens in seconds or fractions of seconds. But that's how you can be sure that most of your transactions, the vast majority of your transactions, are actually real ones, and that you minimize the fraud percentage you have in your platform.
Super interesting, this behavioral data point. I want to ping on it. I like Fred to take me to West Africa. What are the kind of payments fraud and how those affect individual and small business over there?
Of course, thank you. So yeah, I think the first distinction I'd make about fraud in West Africa is the difference between the banked and unbanked populations. Unbanked obviously is completely cash organized. Fraudulent behavior can be kind of similar to what Caetano talked about, taking goods on supply credit, in installments and never returning to pay the prices. Or as Meena was saying, can be kind of informal savings groups where there are individuals who save together. Normally, one person is in charge of storing those funds, and there is a high prevalence of those funds either being misappropriated or just the individual that was being saving them vanishing from the community. In a society where there is basically no digital identity systems, it is quite easy to disappear in effect. The thing that Eshango is trying to work on, and Eshango is trying to support people to remove themselves from that informal bank system and trying to add some of the kind of layers of security and safety that we know fintechs can offer. However, the problem that we face is also that fraudulent payments can also happen on the banked systems. Bank systems in West Africa generally involve mobile money accounts. Mobile money is effectively the biggest banking system across Africa. And what is very easy to do in mobile money systems is because your identifier is a phone number, you don't have a very big KYC process involved. So what we are starting to see a massive proliferation of are basically Ponzi schemes. Organizations are set up. There was one set up last year in Sierra Leone called Super Advertise, which basically offered above market returns for individuals that were willing to save with them, 300% returns. And it was a very classic scheme, utilize the first people's payments to repay others and kind of build the model until suddenly it all collapsed. And the problem that we face as a company is that we are encouraging people to make digital payments to our savings. They struggle to see the difference and are fearful of the difference between what is a legitimate financial technological product and what is an illegitimate one. Financial literacy is very low, public awareness is incredibly low. I don't think the mobile money companies and the regulators are really doing enough of a job to spread public awareness on the issues. So for us, we're having to develop kind of public awareness programs where effectively we still have to use a physical human being to make the payments to start with. We feel the link between the person and the financial technology is a vital step in order to encourage people to realize this isn't a fraudulent payment. So yeah, I think it's very different, but I think it's, as we already said, quite similar across the board. I just think it's kind of different aspects of the kind of fraud payment journey we're having to go into. I mean, for us, OTPs, so one-time passwords, are a huge benefit. People who save with us are only able to make withdrawals if they are provided an OTP from our system, which adds a level of security. They also receive SMS messages for every deposit that they make and every withdrawal that they make. So, it's trying to build all those different kind of layers. But every time people and a Ponzi scheme appears, trust is lost, our bottom line is damaged. I know of a few companies that have effectively had to stop operating due to kind of lack of public trust in the mobile money system as a whole, as a result of some of these payment frauds. But yeah, I think that's it.
Yeah, no, thank you very much. And since I have you here, I also have another question for you, because, with Ponzi scheme and scam system, what is very impactful is the replicability of them. And I think it is knowledge that this Ponzi scheme might be running in several countries in West Africa. And I'm wondering if could central banks be doing more, sharing information across board in order to identify and prevent patterns?
Yeah. So it's always dangerous to start talking about central banks when you rely on them for regulatory needs. They're doing a great job, of course. However, yes, I mean, so I work across Sierra Leone and Liberia currently, and I've had several meetings with central banks in both Liberia and Sierra Leone. And the thing that really surprised me is that the Ponzi scheme that happened in Sierra Leone called Super Advertisement, a very pretty much matching scheme was happening at the exact same time in Liberia called Smart AI. I don't know where they get their names from. And I was the first person who ever had a conversation with the head of financial technology in the Central Bank of Sierra Leone to explain that there was a very similar process happening in the country next door to them. So yeah, I think that there could be much better avenues for information sharing, for communication, things like, I know that the EU has spent a lot of time kind of harmonizing and establishing cross-border regulatory schemes to kind of improve fraud responses. I think what they would say in return is that the capacity isn't there for them to be able to do that, which obviously is a concern. I think the central banks, if they are going to pursue this push to make everything digital, which obviously does benefit society, will reduce fraud over time, increases payment processes, enables businesses to solve cash flow issues, all of those things, they really do need to start taking their responsibilities to ensure that KYC regulations are passed down to all establishments and that they're verified and checked. They can run better public awareness campaigns, I think. And also, yeah, they can engage with the central banks of the region better in order to try and understand what are the most common type of fraudulent payments, the most common types of schemes, and try and create a kind of common theory or an open channel to ensure that if one establishes in Sierra Leone or Ghana or Guinea, that the other central banks become aware of it, because then they could maybe move faster to kind of create and shut down those schemes. But yeah, I think it's a difficult job. But yes, there is definitely more they can do to create a better ecosystem with which to ensure that fraud and payment fraud is less prevalent in West Africa.
Yeah, I think personally, central banks have like a big role in not only regulating, also enforcing and making sure that all the measures in place are on track. On the measures, Meena, I would like to come back to you on Pakistan. I'm very curious to learn if there is any new anti-money laundering or know your customer or any anti-fraud measure in the digital banking framework or anywhere else more generally?
Yes, so the regulator has come up with a set of security guidelines and anti-fraud measures for digital banking products and services. It is, the idea is not just to curtail fraud, but also to build trust of the customers, on the digital platforms. And State Bank of Pakistan is, they're quite focused, in driving financial inclusion. So obviously, this is something that they are very actively looking into, and same goes for the AML and KYC guidelines and processes. They have, over the years, they've introduced new policies for AML, KYC, CDD, and they've also updated the old ones. They've just I think a few years back they've introduced digital onboarding framework, which means that you can onboard customers with complete digitally done KYC and CDD. The guidelines for anti-fraud buyers are also very, very extensive, to enhance app level securities and how the customer data is to be managed, the encryption protocols, the network level security. I think, and again, fraud and risk control that are to be built in the app, and velocity checks, and again, the modules, the risk module, which are to be, deployed at the back end to manage, the entire activity, the complaint management module, and complete customer education regime is also part of, the same document, whereby, the customer has to be not just educated, on various types of fraud, but also the banks have to ensure that, the customer receives transaction alerts, or notifications in their apps. And along with that, even, they need need to know, if there are any credential level changes in the app or through any other digital channels. So yes, and they're very, they're quite actively monitoring the implementation of this of these measures as well. And they're tough, obviously, on it, because failing to do so, the banks will have the onus obviously lies with the bank for the loss of customer funds, just in case if something happens. I think again, because the State Bank of Pakistan, has been very committed to this entire digital banking drive or digital financial inclusion. We as banks, we also get to have instant or real time KYC APIs from our national database authority, which is the citizen database of Pakistan. So that's a plus point. You can get instant KYC verified from them, and you can also get biometric verification through them as well. So that has also been part of the digital onboarding framework. Again, they've also partnered with the mobile number associations or the telecommunication basically database bodies to provide mobile number verification as well, so you would know that if that the SIM exists in the person's name or not. So these are all just to enhance the security of the digital banking applications and the onboarding framework. Again, I think they've also mandated the banks to deploy the real-time monitoring tools. So the fintechs have been obviously ahead of the game because they already had most of these things deployed, as I mentioned about Zindgi as well. But yes, the banks are also catching up and deploying these measures for the digital banking apps which their customers are now using. Yep.
Thank you, Meena. It's super, super interesting. Caetano, I would like to get back to you on the data behavior key points. I think you are setting the ground with doing something very innovative, and I am very curious to understand how the Brazilian market is reacting, or how is the Brazilian market is well protected, or what kind of approach is taking towards regulation and measures.
Great point, and it's interesting because Fred was talking about the intervention or still the extent of what the central bank could be doing, and actually that's what changed the market in Brazil. Brazil now has a thriving fintech ecosystem. We're operating in payments, and obviously a lot of that is fraud related, but there's loads of initiatives around instant payments like Pix, which is central bank. The central bank was the one launching it 4 years ago. Open banking is advanced here. Even digital currencies are advanced in Brazil. And it all started 10 years ago when they started unbundling licenses, because up until then, this was actually an oligopoly of a few banks and a few players, very profitable ones. And then by making it easier for you to obtain licenses and simpler ones, you actually opened the door to a lot of very innovative companies operating in financial services as a whole. Obviously, the landmark example is Nubank, which is now public and worth 65 billion, and that's a bank that mostly operates in Brazil, also Mexico and Colombia, but mostly Brazil. But then there were also a lot of innovations around other areas. And in our market, in the market of payments, or even if you think of merchant acquirers as a whole or payment institutions, the same dynamics applied. So there were few players servicing all of the market. And what that does is you start trying to apply a one-size-fits-all strategy for a massive market where, if you take Brazil alone, this is roughly $800 billion being moved every year just on merchant acquiring. And so there's a lot of different profiles. There's very standardized transactions. There's more non-standard higher ticket transactions. There's transactions paid in multiple credit cards. Installments makes the whole thing more convenient, but more complex to operate as well. And so what we understood in our behavioral model was we started understanding that there was a very strong pain point on anyone who was selling and accepting payments online had a very tough time in trying to get these approved. And sometimes it was the difference between concluding a sale or not, because it could be a point of look, this transaction did not go through. It's unclear why it did not go through, but I'm actually operating with a few players, and I'm a mid-market company. I'm a solid company already in a few millions a year of revenue, but I'm still too small for this large acquirer to spend too much time on me. And so it takes me a while to figure this sale out. And by the time I'm figuring it out, which can be a week, I might be losing this sale. And so there was a lot of friction. The market was full of friction, and mostly it was because of this. Since you had an oligopoly, a profitable one, you didn't have an incentive to necessarily make it frictionless for everyone in the market, because you could actually run a very profitable company by servicing part of the market, and then there would be a fringe, and a very large fringe of companies that would just face a lot of friction day to day simply because there were no alternatives. And going back to the point of unbundling licenses, now it became a more competitive market. And this is the way in which we found that we could make this work, which was, look, it probably does not make sense to look at the transaction just by the amount, and then it's riskier on the transactional level because it's more expensive. And so the potential loss is higher. Let's look at everything else that goes through it. And so in this way, what we managed to do was actually be a lot more effective in what's a fraudulent transaction, what's not. We increase approval rates, and so we make the lives of our customers easier. At the end of the day, that's what we're here for. And we just kept on digging on that and understood, look, there's a lot to be done here, and there's a lot of fraud prevention models that could be based on behavior, especially because unlike some other markets, Brazil is very digital across the board. So Brazilians are very addicted to social media. I think they're second only to the United States. Everything is done digitally, and even Pix, which are digital instant payments, spread like wildfire through the country. And so what that does is it's very helpful in having all of this data online and actually applying these models and doing this in a digital way. So we do have a few tailwinds there, and it's just a matter of spending your attention in the right space.
Thank you. It's just so interesting to see how the digital should make the things easy, but there is a layer of complexity below that is not that evident. We are almost coming to a conclusion, but before I leave you, I'd like Rory to help me out identifying what are the jurisdiction and what are they doing in addressing, payment fraud globally. I know that you have a more global view. I'd like you to help me out in understanding what are the trends.
Well, we've heard some sort of great examples of what governments and regulators are doing specifically in Pakistan and Brazil and Sierra Leone and Liberia. And I can sort of wrap up various others as well. So, measures like multi-factor authentication, which have been common for a long time in the UK and the EU, they've been adopted in most places. And it's quite interesting at the minute. I think Singapore is starting to retire the use of SMS one-time passcodes because these are so easily spooked. So some jurisdictions are becoming a little bit more sophisticated in combating the typical kinds of trust signal spoofing. That's what I would call it. And then in the UK is the one who's sort of leading the way with which is authorized push payment fraud reimbursement requirement, which is being introduced as we speak, depending on when this webinar goes online. And that will require the payments sector, banks and PSPs, to reimburse victims of fraud up to a certain amount in an effort to incentivize them to take further preventative measures to sort of prevent fraud in the first place. And of course, that idea kind of can be taken further. And in the UK and in other places, there is a question of whether it's aligning of incentives ought to apply more broadly. So in the EU and Singapore and Australia, regulators are also looking at whether telecoms providers, social media, other digital platforms should have to reimburse victims. And, Caetano touched on this idea about aligning of incentives and how you incentivize the whole of the payments chain to prevent fraud. Then, we've talked a bit about data sharing on the part of banks and central banks to identify fraudsters and sort of lock them out of the financial system. But that's proven quite difficult, possibly because of sensitivities about data protection. So the example that Meena gave of Pakistan's central registry, KYC, and mobile phone data is great to hear about. And then I think the challenge that very few people I've got to yet is the cross-border dynamic. Fraud is sort of a globalized industry, but I'm not aware of any concerted efforts so far to address what we do with the flow of stolen funds cross-border and normally out of the reach of law enforcement in the victim's jurisdiction. So there's a lot more to do. I'll leave it there.
Thank you. You actually summarized everything that we have mentioned today, so you made my job easier. Some key things that came out from this conversation for me as key points are the education. I mean, consumer needs to be educated, and that would be trust, and that would build a more streamlined and effective system. It's very interesting. I'm very appreciative of your time. Thank you, Meena. Thank you, Caetano. Thank you, Fred. Thank you, Rory, for sitting with me today. I definitely learned a couple of things that are very important. And you took me on a journey. We started in the UK with a credit card. We moved to Pakistan with the social engineering. We went to West Africa with the Ponzi scheme, and then to Brazil with the data behavior key points. I think, this is like actually a very rewarding way to explore one topic globally. We really made sure that touched every region. And for the audience as well, thank you very much for joining us today. If you are curious or you enjoyed this webinar as part of the Financial Inclusion Week, we invite you to visit our website, Financial Inclusion Forum. And till the next time, thank you very much all.